It may not be common knowledge, but when you can't make monthly payments on your house, the bank takes that shit. They give it to the government, and then the government gives it back to the bank, and the bank will sell it back to you at a lower rate and a longer time. Basically, you never own a house. So, with Christmas right around the corner, I just wanted to discuss a couple things that you might not know is underneath your tree. So, inflation, the 50-year mortgage, and the 100-month auto loan are the three biggest things that everyone's really talking about if you're in the hearsay of the current market today. So, when we talk about inflation, for example, I just want to take a step back. I want to address what inflation really is. So, inflation is the loss of purchasing power of United States currency. This occurs when the Treasury decides to print an excess of bills or notes in the denomination of Treasury bills. And then they use that to finance things in the world. So, post World War II, this is exactly what the global economy has been doing. Now, when we look at economic growth as a country, we look at a statistic called gross domestic product. So, GDP, according to consumer spending data, has increased 4.8%, showing that our total United States output has increased by almost 5% in a year. But what does that actually mean? And why would we be cutting interest rates if the economy is growing so well? And why would we be offering a 50-year mortgage and a 100-month auto loan? So the prices of the home and the prices of auto, they're not coming down. They're just becoming more affordable for lower income demographic families and people and individuals just like that. So what is really being told here in the story is that people are coming to the bank and they're wanting to access ownership of homes. But when you think about the reality of a 50-year mortgage, what does that actually look like? So I would assume it would look something like a teaser rate for X years and then a floating rate for X years, the remaining X years. For example, let's say that I have a 3% teaser rate for the first 10 years of my 50-year mortgage. So for 10 years, I'm going to be paying 3% of my home, and then on year 11, I could be faced with a variable rate. That could be the same 3%, or it could be 56% of my mortgage. If my mortgage is $500,000 and I all of a sudden owe 300K on it in a month, I'm not going to be able to pay that. So it's a reality similar to 2008, what happened with the no income, no job verification loans that were being collateralized and rated AAA by the rating agencies maliciously. And I do expect something similar to this to unfold. But when we are looking at the auto loans, for example, car prices are at an average of $50,000 for a new car. And who really has that just free open liquidity of 50 or an excess of 50 grand to just expel on a given day. So I don't really see that. And when I'm looking around at the trends, it doesn't appear that the growth that we're witnessing as a country is translating into growth in our bank accounts. So what can we actually do? I know that a lot of people fearmonger about the market, but there are actionable steps that you can actually take to prepare yourself and your future family for self sovereignty. And part of this includes a diversification. So you get to decide what you think is a proper safe haven hedge against inflation or an insurance contract against everything that's happening today. If you were asking me and I was providing to you non financial advice, I would probably recommend looking at things that have real physical scarcity and aren't tied or married to the politics of the United States dollar. So, an example of that kind of asset class would be gold, silver, or Bitcoin, and that's famously characterized as the debasement trade, which is floating around Wall Street desks today. The second thing that I would look at doing is diversifying into anything that has real value in the real world. So, something that can't be publicly traded on an exchange, like actual gold bullion, is another example of something that would hold authentic value over time. I know we witnessed in COVID that there was a lot of speculation on fine art. This is another example of an asset class you can diversify into to hedge against inflation. So, a lot of these topics are very, nebulous to a lot of people. But if you're looking to learn more, just drop a comment. I'll respond to you. I'll sit here all day with you if I have to. But in an effort to prepare all of us and anyone who's watching this video against the inbound, threats of the economy, I would highly suggest to do some research on debt repayment and to get out of any structural debt that you currently have today. So thank you guys for watching. My name is Dylan, and I'm so happy that you guys are here today. I'll see you in the next one.